Hello, welcome value investors. In this video, I'm going to show you using the discounted value method how to calculate the intrinsic value of the stocks. And then we'll use this intrinsic value to compare against the market price. I have created this template and I will put this template link for you so you can easily plug and play and use this for your future intrinsic value calculations. So before I get started, I'll show you what are the input we are going to need into this one. So for sure we need a ticker name. If I'll use the Apple, let's say the APL, and you can easily see by when I put the Apple, it gives me the current Apple price. So wherever I need the input, I'll have that mark as a white, right? For example, I need a growth rate and I'll show you from where to get it. These are easily available and should not be and then have any problem. So we'll take the 10-year projections, right? So we'll take the growth rate from 1 to 5 and then to 6 to 10. Why 2 growth rate? Because one growth rate will grow for 1 to 5 year and next 6 to 10 year, right? Here in this model, I'm taking the earning per share. The earning per share is easily available, and that's a good way to also to calculate the earning per calculate the intrinsic value. So that's one of the way as well. Then I'll take the terminal value. Okay, what is the terminal value? The terminal value is because we are projecting the 10-year earning projections, as you can see here. At the end of the 10th year, we assume we're going to sell this security, or we assume the growth is equal to the economic GDP growth rate. So here I assume it's 2.5%, which is pretty consistent how the US market, or depend if you are in non-US, you can input your country's growth rate. But here I just take the US and Canada like 2 or 2.5%. Then the discount rate. What is the discount rate? So basically the discount rate when we project this earning, how much discounted those earning into today's values term. So that's what is already used as a 10% rate. So I assume in order for me to invest in any security, especially on the single security, no matter what it is, right, at least I expect then 10% return. Why 10%? Because historically S&P 500, which is the broad-based, which is the S&P 500 index, last 10 year around it gives 10%, almost like a 10 to 12% return. So I'll take like a 10% from that perspective. Otherwise, why do we need a risk even to compute to invest in any single security? Better to invest in an index fund. Then this is the next concept I'm introducing here. Most of maybe might know the margin of safety. This comes from the book by the Margin of Safety itself by Mr. Seth Karlman. He's a very big super portfolio investor, and usually in my video as well, if you can see in the past, I have covered his portfolio as well. So what that book is all about, and this is honestly, if when I was reading the Mr. Warren Buffett or Ben Graham, right, or those investors, they also mentioned the same thing, that we might have some errors while doing that, the intrinsic value, because these are future and nobody knows the future well. These are all, so it's better to have some discount there, right? So that's called margin of safety. So for the margin of safety, I have taken as 10%. Right, but depend upon, you can take it, and then these you can change as well, but I just kept it 10. Okay, so I'll use that. Let's take a very first example. We just need to input the number and then it shows, right, the calculation itself. So for the first one, for the Apple stock, which is the ticker name Apple, if you don't know the ticker name, honestly pretty much go to the Yahoo Finance, which is here, and you just type the name, and in the bracket you will get this ticker, right, AAPL. That's what I have put here. And the good thing about the Google spreadsheet, the moment you put the any ticker name, it immediately give you the that day market price. So that's what I like about it. So if, for example, if I want to do like AMZN, which I know this is for Amazon, it's giving the Amazon price, right? So let's go back to Apple. So now to get the Apple growth rate, what we need to do, we need to go to the Yahoo Finance website and then go to the analyst section. Okay, in the analyst section, go to the very bottom left, and you can see here the next 5-year expected growth rate estimates, right, which is 12.64. So we simply take this number and put it here, 12.64, and enter, right? The next thing is what we need to do now. We need to have the growth rate for so this growth rate is for 1 to 5 year, right? This which is I'm highlighting. The next is what you need to do. You need a growth rate for 6 to 10, which is these many years. So this is just the estimate. So we can take, like, let's say 5%, right? You can take whatever you want, depend upon. So usually after 5 years, it's a little bit gray. So we expect the growth rate might decline further. So as a little bit on conservative side. So that's why I have taken the 5% growth rate. Now earning per share, again, go back to the Yahoo Finance and click on the summary tab. So in this one, you can easily see the earning per share is 3.28. If I go here and type 3.28 and click enter, I got all my calculation automatically done, right? So we can see the earning is grown by 12.64%, and then it declined after 5 years to at the rate of 5%. Then at the 10th year, what we have done, we have taken the terminal value, right, by using this formula. This is the formula, basically is called the Gordon growth rate formula, which I have taken to use the 10 year terminal value calculation, right? Just to be a little bit more technical on that. But so, and then with the 10 and this one, since you'll have the spreadsheet, so, but I'm just going over a little bit with you, so you don't have any, and if you have any question, feel free to put in the comments. So here I'm taking the 10% growth rate, 10% discount rate, right? To discount this to the present value term. It's a simple math, nothing much fancy here. So when I do this calculation, my intrinsic value is coming as $73.71. So that's what my calculation. So we can easily see the market price is higher than what we have. So this means the Apple security is purely overvalued based on the input what we have got. Although this intrinsic value is already lower, but what the model is suggesting based on the margin of safety, that we should at least enter by 66.34, just to be a little bit safer, to have a cushion, maybe the security not further dropped, right? So that's pretty much all value investor usually follow, or at least I'll try to follow that. And different people have their different margin. If you think no, Apple is good, so feel free to change this to 0%, right? Or just leave it there and just use the intrinsic value. But pretty much so otherwise just leave that one. So no, right? So that's on the Apple stock. So this is one of the, so let's take another example, right? Here, what I will do, I will take another stock to compute is intrinsic value, which is the Amazon. Amazon is the growth machine, we all know. And let's see whether it's still is overvalue, or based on the fundamental which we're trying to put in the calculator in this model, will it give the on the discount. So far, before I go to the Amazon, if you're new to the channel, feel free to subscribe and please give a thumbs up. At least I expect to have at least 10,000 or more likes on this videos. So I'll make more on these kind of video, more on the quality kind of videos once I'll see those appreciations from you guys, and it really motivates me to share the knowledge, right? Rather than me to go to the stock valuation and try to bring the intrinsic value calculation and all. So okay, so if I go to if I need another, so let me just clean this one out, right? So just the 3 white, and then I'll clean this, and then now I'll go to Amazon. For Amazon, so I'll just go to the Yahoo Finance and type the Amazon. You see, even here I got the symbol AMZN or Amazon. So I'll just type the Amazon here, AMZN, and you see right away I got my market price, right? All I need is now just plug the numbers, right? So on the front page itself, we know the Amazon earning. Look at the earning, what Amazon per share is doing is $34.20. So I simply put here 34.T0, right? It doesn't need to be any order. As long as you put the number, it's that what it is needed, right? And if I go here and go to the analysis tab and go to the bottom left, it's giving the next 5 year is 36%.35 basis point, right? So 36.35 if I enter, right? And then the last 6 to 10 years, let's assume it's 19%, right? If I enter this one, seems like if I just take this, seems like the security is pretty much close to fairly value. It's not that distance from the market price. So what we are trying to get from here, it's not just like plug in number. So we're trying to see, so if the little bit of gap of seems like because of the larger number, it's the intrinsic value is lower, but it's not that much of a difference. So we have to think it's just not like a dollar or cents. So it seems like it's close to the fair value, right? So the security, but as a value investor, we should at least give the margin of safety of 10%. And from the safety point, if the share price drops to around 2,700, that's the best, or lower, right, to go and enter in, make a position into the Amazon stock. So that's one perspective. Now, for example, there are many concepts. So this is just to get one intrinsic value. But for example, need to go, okay, on the, what are the gross profit margins? What are the net profit margins, right? If you don't know, or what is the PE, right? Because, right, what it's trying to share here. So if you need to understand those, I have a video in my channel. Feel free to check it out on that as well. I'll try to put a playlist at the end of the video. And second thing, if you're following my channel from few last 6 months or more, right, where I more actively publish the video, I use not only one method but multiple methods. So this is the one of the method to provide the value. For example, free cash flow method, the enterprise value method, and then earning per share method for sure. Maybe a little bit difference in the earning per share what I have used, right, or here, not much difference, but just I if you want, you can see how the value is calculated, so it will give you more confidence in try to plug the number and use it. And last but not the least, right, if you like this kind of video and you want to have me making more of this kind of quality video where I'll sharing my knowledge, please give a thumbs up and like, and put in the comments as well, so I know what you're thinking on that one. And last but not least, my son is also making, if you have a kid in the house or you like reading books, my son usually read books. He's in grade 3, and he love reading books like comics and all. So if you're a kid, please free to subscribe to that channel as well and share with your kids. So yeah, that's a request. So thanks for watching, and hopefully you have a wonderful happy holidays, and see you soon in next video. Bye for now.